Wednesday, April 12th, 4:57 p.m. New York time, U.S. stock markets close. Recapping my day trades I did this morning on the stock ETF SPY, which is the S&P 500 stock index, and I traded derivatives. Derivatives is one of the forms with options. Yep, there's several kinds of derivatives. You have derivatives for the home insurance, auto insurance, life insurance. Those are derivatives. You have derivatives in the financial markets. Some of the derivatives in financial markets are options, some are futures. And then the underlying products, well, that's that, the underlying product. So if you're doing auto insurance, well, obviously your vehicle is the product, but the contract is the derivative on the product. You trade derivatives in the futures market, commodities such as metals, commodities such as energies, or also in the futures market, the currencies as well, the equity index, you're trading contracts on those. Those contracts are a form of derivative. So here I was trading derivatives on a stock ETF, which is the best liquidity, the S&P 500. We're looking here on a chart, one-day chart. Each candle here is 5 minutes. The darkened area is the extended hours. And sorry, the lighter gray areas are the extended hours. And this middle darker area is the cash hours, 9:30 a.m. to 4 p.m. So here was a high, the market when it opened at 9:30, but this was the high of the market pre-market. That was a low. That was a high regular trading session. That was a low regular trading session at 4 p.m. 5-minute charts. Markets opens up, sells off, goes in consolidation phase, does a retracement of the sell-off. Doing that retracement, goes in consolidation, breaks out of consolidation, continue with the momentum to the downside, into consolidation. Consolidation breaks below that, continues going lower, forms this bullish pin bar here. Nice spring bottom, then reverse trend. Impulse move up. Consolidation. Again, these are 5-minute candles. I like that consolidation here. So I bought options. I was buying them around 22 cents, 21 cents, 24 cents, the contracts. I like them here. So I bought some more. When we broke out, we had a big impulse move up here. Another impulse move. I bought more. Continue going higher, higher, higher. I already had a working order to close to take profits. My goal was to do double what I bought them for, but I closed early. I closed around 45 cents each contract. Yep. I'm very glad I did, because if I got more greedier to go higher, look at that. It rolled over. That momentum didn't continue going higher, so I closed. Again, happy camper. I closed around $45 per contract. And like I mentioned, I bought them around, on average, around $22. So did double. That's good. Walked away for a little while, came back, saw this consolidation, impulse move down, and I'm thinking, okay, this prior area was a zone, supply zone of sellers, and we couldn't even get above that. So I went bearish bias. I bought more options. Again, these were not credit options. They were outright buying the contracts directional. So they were debit. You sell options, they're credit. If you buy them, they're debit. Move went down, consolidation. A lot of whipsaw happening here. I was still bearish bias because I saw weakness here, weakness here. So when this bearish bias, consolidation, impulse move up, that momentum didn't keep following through. Look at that small trading range up here, like a doji. Let's extend that out. That little tiny candle, like a doji, indecision. On the top of a trend, big move like that, yeah, that was not a follow through in strength. So I added more bearish positions. So I bought more options. And then huge impulse move down. Again, these contracts I bought around 22 cents. And then here when I added to it, I paid 11 cents per contract, which is $11. Again, these options are price in pennies, but they're equivalent to 100 shares. So I bought $22 per contract here, around $22 around here, around $11 per contract here. My working order was to sell for $50 per contract. And as we had this big impulse move down, I adjusted my working order. I moved it up to 60. And then we went lower. I moved it up to 75, went lower. Yep. And as it was moving lower, went down real fast, hit my closing order as I was trying to adjust it to have more gains and got closed out. Yep. So from buying them at $22, buying them at $11, I closed them at $75. That's a beautiful thing. Left a lot of money on the table for the other kids. Consolidation, breakdown, further lower, consolidation, breakdown. Yeah. So learning lesson here is be flexible adjusting your prices. Because again, if I didn't close here and stayed in the trade, I would have been negative, lost. So from that again, closing there, closing here, halfway from the bottom of the trend about, I still made profits. That's good. So these options I traded, they expire the same day. So open up the trade tab. There we go, the stock symbol up there. Option chain. These are contracts. Shows the expiration day, 12 April, 23 for the year. So 12 April was today. It says 0, means expires the same day, expired. Because these are stocks that expired. And then this one, tomorrow, 13 April, expires tomorrow, 1 day. This one expires 2 days, 5 days. So that's good. I have many choices here. Open this up, this option chain, the one that expired already. Tomorrow it would be, or late tonight, tomorrow it would be taken off. This won't be here anymore. Again, you look at columns here. Bid ask, just like stocks, bid and ask. Bid and ask. On the call side. On the put side, bid and ask. Let's go over bid and ask. Well, if you're buying, you're typically buying at the ask. And if when you buy something, you want to close out the position, sell it back, you're typically selling it back at the bid. If you're shorting, you're typically buying at the bid. And when you're short and you want the prices to go lower, and when they go lower, you buy them back at the lower price on the ask. Same thing with these options. But you're trading contracts where here it's stock shares. Here's the deltas. Here's the deltas. Here's the volumes. The strikes I was choosing was mostly 1 to 2 strikes away from the underlining. When someone says the underlining, they're talking about the underlining financial instrument. This one being the SPY, the underlining closed at 408.05. So 2 strikes away, well, that's 408. And it's closer to 408 than it is 409. Well, 408, so the closest one would be 407. So 1 to 2 strikes away, depending on what direction you're going, be 407, 406. On the upside, 409, 410. So you can see here, when I bought them here, my bullish strategies,